morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm just Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. More foreign portfolio investments or hot money enter the country in November. That's according to the Banco Central. The amount of hot money inflows reached $227 million last month, the second straight month of inflows. However, this was lower from October's $439 million. Data from the BSP shows that two-thirds of central bank registered foreign portfolio investments went to listed companies, particularly banks, property players, and holding firms, among others. The remaining one-third went to investments in peso government securities. On the other hand, outflows for the month reached $1.3 billion, higher from over $900 million in October. The BSP attributes the outflows to the continued impact of the pandemic on the global economy, geopolitical tensions, and extended quarantine measures in the Philippines. Meanwhile, the country's balance of payments remained at a surplus for the 10th straight month in November. The BOP, a measure of the country's transactions with the rest of the world, stood at a surplus of $1.47 billion, more than twice from last year's $541 million. However, this was narrower from the figure in October. The Banco Central says the surplus in November reflected inflows mainly from its foreign exchange operations and income from investments abroad. President Duterte has signed the 4.5 trillion peso budget for 2021, his penultimate spending plan before ending his term in office. Next year's budget is higher by nearly 10% from that of 2020. It allocates 700 billion pesos for education and almost the same amount for public works as government pushes to resume its ambitious Build program. The Health Department, which is at the forefront of the fight against COVID-19, has been allocated 287 billion pesos. A separate 72 billion pesos has been budgeted for vaccine procurement. The palace says the president was poised to veto some items in the spending plan, but details of which are yet to be available as of writing time. Duterte also announced new quarantine classifications for the country starting January. The capital region, along with 9 other areas, will be under GCQ until January 31st. The rest of the country will have the more relaxed modified GCQ for the same period. All right, Dan, finally, we're at the last trading day of 2020. Is that something that we should be excited about?
I don't know, just absolutely if you're talking about optimism for the future. But of course, we're not going to give up this last trading day without a fight. And if you can see in my terminal here, it seems to be the case, at least offshore. You're going to be seeing Wall Street overnight hitting record highs. Recall that most countries, most indices are also on holiday mode just last week until Monday. And at the open of Monday, we could see the U.S. equities actually rallying. This, of course, after President Donald Trump signed a coronavirus aid package that's already a combined $2.3 trillion package. And this is also linked to the House, which has backed the President Trump's proposal to boost their stimulus check. So before it was just $600 per person, it's now $2,000. And because of this, Goldman Sachs had actually upgraded the first quarter U.S. economic growth forecast because of this measure. And you can see here that, most of the equities, even over in Europe, which has also been suffering, another new variant of COVID-19 in the UK at least, and in other countries now as well, had also ended in the green when they came back from the holidays. Quick check on Asia and whether we are following suit and can actually pin our own hopes here. You can see that the Nikkei 225 is up by 1 3/10% this morning, waking up as well to some exciting news here. You've got the Taiwan TAIEX also up by 0.13%. And over in Singapore as well, a little bit towards the greenish side, that's up by 0.08% this morning. Now let's take a quick peek at our own local index. I had checked this just at 9:30, and we did open in the green, but we were swinging between gains and losses. We're back into gains territory, now trading at 7136.98. And this is actually up by 0.2% from yesterday's slide. And you can see on my terminal here our 3-day chart, which has basically been, no investor knows really where they should be positioning right now. It's a tug of war here. This, according to Timson Securities, says Darren Pangan. Market participants were digesting yesterday the developments over that new strain of COVID-19, and most have decided to stay cautious. AAA Equities, as Chris Mangon, however, did mention that there was really panic selling because of a possible tightening of lockdown restrictions. But now you can see, as you mentioned in the banner, that it will be GCQ, so still looser restrictions here in Metro Manila, at least for the time being. But nevertheless, we did have stronger turnovers on Monday compared to the previous week. You've got 8.14 billion pesos worth of trades, but still net foreign selling persisting, although that just declined to less than 100 million pesos yesterday. Now let's take a quick peek at the sectors here. And whether there are some that are performing or pulling the boards better than others. You can see in my terminal here, financials staging the biggest gains. It's up by 0.6%. Properties, however, going the opposite way. That's down by 0.5%. Now, just a couple of stocks that I want to check in on today, Jess. As we're still, a lot of people are still on holiday mode. You've actually got Skyway 3 now partially open to motorists here, especially during this holiday season when people are just, traveling everywhere. Now, they're saying that this will now be free of charge for a month. That's starting today. There will be 4 lanes open, and it's actually 7 lanes in total. So 4 muna. The rest of the 7 will be open and operational by January 14. So recall that this is an 18-kilometer addition to the Skyway. So it used to be 20 kilometers. It's now going to be extended to 38 kilometers. This new extension connects Buendia and Makati all the way to the Northern Luzon Expressway in Balintawak in Quezon City. SMC, however, down by 1 peso this morning, sitting out what is a tug of war of hopefully a rally this morning. And finally, just a quick peek on Meralco. So recall that we had reported yesterday about JG Summit and MPIC selling their stake of Global Power over to Meralco, which is now going to be restructuring the company. But the PSE has mentioned that because they did not actually receive the requirements of information, they had halted the trading of shares. And you can see here that Meralco is now back on the trading floor, trading now in the green. That's up by 0.6% to 290 pesos, Jess.
All right, we've gone through at least some of the stocks here in the index. Let's do one quick check here of our local unit before currency trades. Also take a breather. What's happening with the peso?
Okay, so I just wanted to take a quick peek at the world currency ranking system as we end, of course, the last trading day of the year. And you can see the year-to-date basket in Asia. And I just want to highlight here how we are 5th in the pack. We're still on the upper half, let's say, portion of best performers here. And we gained 5.5%. Now, recall that this has already us going down. We were at one point the top performer in terms of currency. So just a quick check in on that, especially in the last few days. You're going to be seeing us still hovering at 48 levels. So 48.027 is where we are going to be more or less ending the currency, Jess. So anyway, let's talk about markets later on in the broadcast. We have, of course, our guest from Philstocks later on, but let's talk about the economy in general. There's actually one study that's saying that we might become the 22nd biggest economy in the world, but of course it's going to still be in 2035. So what's driving this number?
Can it be 2035 by next year, man, if that's the case? But you see, if we try to take a look at the study here, it would show that really steady growth would actually drive that rise, at least in economic projections for the country come 2035. This at least is according to the Center for Economics and Business Research by the World Economic League table here. Currently, we are standing at the 32nd spot here. Try to take a look at the study this 2020. So they are expecting us to move up 10 spots to the 22nd spot, like what you mentioned, in 15 years' time. The report did mention, however, that the Philippines still is considered to be a lower middle income country, and that the pace of growth has been impressive over the past years, but the population has also been rising rapidly at 1.5% annually. And they're saying that the pandemic had major adverse impact on the country's economy. In fact, they are forecasting growth, at least for 2022, GDP at least to experience a contraction of 8.3%. They're also saying that debt to GDP is going to be at 48.9% from just 37% previously. Now, like what I mentioned earlier, what's going to drive this is steady growth, because they are projecting that our GDP will actually grow at an average of 6.7% in the next 5 years. That would bring us to the 28th spot come 2025. That, though, however, they are expecting that to dip to 6.5% from 2026 to 2035. Hence, our better rankings at least come 2035, which is at the 22nd spot. Now, should that happen, then get this, we might actually overtake Sweden come 2035 when it comes to global rankings, when it comes to world economies here. Now, in 2019, however, the same study actually predicted that the Philippines will be reaching the 22nd spot by 2034, but they had to adjust it because, of course, of the pandemic's impact. In fact, according to them, COVID-19's impact on the global GDP is pegged at $6 trillion. That, however, is expected to fall to $1 trillion by 2034. Also, what's very interesting here is that they're saying that they are expecting China to overtake the US as the world's largest economy by 2028. That's 5 years earlier than what they had originally projected. That's due mainly to, according to them, China's management of the virus and the hit to long-term growth among Western economies like the US.
Okay, Jess, pero 15 years to go before that level. We're just trying to get through 2020 today. Anyway, we'll have more on the news when Business World, when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess de Los Santos. The local insurance industry was not spared from the pandemic-induced economic recession as their total premium income slipped in the first half of the year. The Insurance Commission reports a 4.2% decline in total premiums generated by the industry in the first 6 months of 2020. That translates to 136 billion pesos as of end June from the 142 billion pesos earned in the same period last year. The entire insurance industry booked 10 billion pesos in net income for the period, down 17% from about 23 billion pesos last year. That drag comes from the net earnings of like 20% to 14.3 billion pesos. Now, the Trade Department is once again looking to participate in the Comprehensive and Progressive Agreement for Trans-Pacific Partnership. This comes after the conclusion of the Regional Comprehensive Economic Partnership deal between the ASEAN and its major trading partners. The CPTPP is a trade agreement signed by 11 countries back in 2018. Among them include Japan, Australia, Canada, New Zealand, and Singapore. China and Taiwan have expressed interest to join the new program, while the United States has previously backed out from an earlier version of the deal. On top of the Trans-Pacific Partnership, the DTI is also reviewing other free trade agreements in the pipeline. These include further liberalization measures within existing deals with ASEAN, China, Korea, and Japan.
Payment tech solutions in the country are having a bright holiday this year. PayMaya, for one, bumped up its users to 28 million this pandemic year. The company noted that more Filipinos have been using their e-wallet platform for cashless transactions, which they said has grown triple digits this year. PayMaya said transactions peaked in May at the height of strict lockdowns in the country. PayMaya, which is a subsidiary of PLDT's digital arm Voyager, is expected to turn a profit by 2024. That's as digital payments take on a new role in society. Okay, guys, we've come to the end of the road with our local equities having staged a fight. Here to chat with us on the last trading day of the most volatile year in recent history, we have with us Japeth Tantiangco of Philstocks. Good morning, Japeth, and welcome to our last trading day of the year.
Good morning, Ma'am Danie. My pleasure to be on your show.
All right, Japeth. So a lot of last minute things going on here, so many moving parts. So for one, let's kick off with the budget now having been signed, sealed, and delivered by President Duterte, and also additionally extension, let's say, of the GCQ until Jan. Are these positive catalysts for the bourse today, or were these expected developments already priced in the market rally?
Well, based on the market's movement right now, the signing of the national budget for 2021 has been a positive catalyst for the market. It's the reason why the market is putting up a fight right now to end in the positive territory, at least for the day. And this is because the national budget is seen as something that is vital to the to our economic recovery for 2021. And so its signing by the Malacanang has been received warmly by investors today. Of course, if you're going to look at today's trading, it's quite volatile. There's still downside factors. One of which is, as you mentioned, the extension of GCQ in Metro Manila, as well as in other areas in the Philippines, and finally the new strain of COVID-19, which is amplifying pandemic worries.
Can you say, though, that because of this budget pass, that we can see a stronger stimulus for economically for next year, or is it just excitement that it was passed on time?
Well, the national budget for 2021 is going to help us. I mean, it's 4.51. It's 4.51 trillion. So this stimulus is going to help our economy as it tries to recover next year. Add that we have other fiscal stimulus measures like the extension of the validity of the 2020 national budget, as well as the Bayanihan 2 bill. So these fiscal stimulus will help. Add that monetary policies are also helping. You have interest rates at record lows, and the BSP has already mentioned that they're planning to keep rates as is, at least until the economy recovers. So all of these, the policies, the government policies that we have right now, both fiscal and monetary, they are helpful. But by the end of the day, we have to remember that the government can only do so much. In the end, if we really want to see the economy recover, we need to see more participation from the private sector. That includes more household consumption and at the same time more capital accumulation by the private firm.
Can we do that if the GCQ continues to be extended? There were already hopes for a reopening of the economy, but now even with this new COVID-19 variant, this might actually have downside risks. So even if the private sector wanted to pitch in, it's still unable to do so. And are you having a more cautious tone at the end of this year compared to just a few weeks ago before this whole strain hit?
Well, with respect to the outlook, yes, it's going to be priced in by the private sector, especially the new variant, the new variant of COVID-19. This is something that both consumers and investors will be monitoring. If this one gets into the country, then it's going to serve as a downside risk. And yes, as you mentioned, it could stop. It could dent on confidence. I mean, if you're going to look at the BSP's latest survey, we've both consumers and producers are already quite optimistic for the succeeding months to come. But if the new, let's say, the new COVID-19 comes in, the new COVID-19 strain comes into the country, then it's going to dent on confidence, and it could, again, bring back consumer and producer sentiment into negative territory. So this is something that we have to watch out for. As for the quarantine restrictions, for the GCQ in Metro Manila, as well as in other areas in the Philippines, of course, somehow it still weighs on the confidence. But of course, this is much preferable than the more stringent quarantine measures that we've had previously, since
Okay,
it
so
still
better
allows.
than could have
Yep,
been.
yep.
Let's talk about the U.S. stimulus package. You talked off cam and you said that the Asia had priced that in already, but we didn't actually rally yesterday. But to what extent, from an economic point of view, might we feel the spillover effects of this stimulus being granted in the U.S.? Will we feel it in net foreign inflows, for example, in FDIs, just consumption when it comes to our export sector?
Well, with respect to the U.S. fiscal stimulus, it's going to help us economically since the U.S. is one of our top economic partners. I mean, it's the main source of our OFW remittances. So if the U.S. economy springs up because of the economic stimulus bill that they have right now, then they can help us. Of course, if the fiscal stimulus in the US, if it raises up their businesses and if it leads to more employment opportunities out there, then it's going to be opportunities for us as well through our overseas Filipino workers. At the same time, the fiscal stimulus will is expected to raise spending in the US, so this could help our export industries. And finally, with more stimulus, of course, it encourages investment. It gives people more money, which they can use either to consume or to invest. And if they are to invest, then it could also spill over to us.
Okay, so hopefully we get some of those benefits
Yep.
as well. Japhet, let's move over to our equities space here. And you can see in my terminal here our year-to-date
Mm.
performers. During the height of the lockdown, we only had two or three. There were pure gold and two telecoms. Now we've
Yep.
actually got quite some in green territory right now. Give us your general view of these stocks, and whether there were some surprises here, whether you still see this sort of same trend, wherein you have the lockdown stocks performing the best, and whether this will carry over to next year.
Well, if you're going to look at the stocks right now, it's no surprise for me that the that our telco stocks, especially PLDT, which has posted good results, is still on gains, as Pure Gold, our consumer retail, which has also performed
Mhm.
well despite the pandemic. So if one thing that's noticeable is our banks. The banks are the ones that we are looking into right now. In fact, if you're going to look at it, BDO is
Mhm.
the worst performer. So this is one of the stocks that we're looking into, because if you're going to look at it, yes, they posted lower bottom line because of the loan because of the provision for the loan losses. But if you're going to look at their net interest income, it's still good. And moving into next year, we see more opportunities for banks like BDO, since we expect, if we get it right in terms of confidence, then we expect bank lending to pick up. And if bank lending picks up, then it's going to benefit the banks. So the
Mhm.
banks are the underperformers this year, but at the same time, they're the ones that are good to look into.
Very interesting. Japhet, can you compare the index players compared to the smaller stocks, and how those two baskets actually performed? Whether the bigger companies, the more diversified ones, did better, or whether you should actually be more specific in terms of companies and their focus.
Well, with respect to 2020, we've seen some bargain hunting with respect to the conglomerates. The reason being they are diversified. So if one of the industries they are in gets heavily hit by the pandemic, then they still have other sectors which will either which can help them, amid the challenging times. But because of the conglomerates being one of the favorites this year, most of them have been overbought, or they are currently overvalued. So moving into next year, we may see some correction. Some of our conglomerates may fall. In exchange, funds may flow out to the sector specific companies.
Okay, and finally, last question before we let you go for this year and see you in 2021, Japhet. Should we be positioning in the index players right now? We're still above 7,100, if I'm not mistaken. And some have said that these are expensive levels that they
Yep.
were actually seeing to correct. But others are saying that this rally might actually have some legs. Tell us, is this what are you betting on? Which side are you on?
Well, if you're what I do agree that the market is currently overvalued. So for us to sustain our current levels, we have to see those expectations, those optimistic expectations that brought the market this far, come to pass. Just like the availability of the vaccine in the Philippines soon, further easing of restrictions, and finally a fast-paced economic and corporate recovery. um, uh, I'm not betting on all of the index members. I'm just
Mm-hmm.
looking at some. As mentioned a while ago, I'm looking into the banks. If confidence is sustained, the positive confidence is sustained, then bank lending is expected to be active, or to be
Mm-hmm.
positive next year. And of course, there's still the risk of the non-performing loans, but with the if fist bill, if it comes to pass, then it's going to help the bank. So we're really looking into the banks, and
Mm-hmm.
then we're still looking into the resilient sectors, the likes of the consumer retail and the telecommunications, and finally the utilities. Since next year is still going to be quite uncertain, so you need some non-cyclical stocks to somehow you give caution to your portfolios. And finally, as mentioned, we're not quite bullish on the conglomerates, given that they've been overvalued this year. So these are the ones that we're going to stay away from.
Okay, so very specific place there. Thank you so much, Japeth Tantiangco, Philstocks, especially for your thoughts this year end, but also for joining us throughout 2020, this difficult year. You made it easier for us to understand the markets. Thank you so much.
You're very much welcome on that.
And that's a first look into the business day. Today's Tuesday, December 29, 2020. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess De Los Santos. We are One News.
Hi, Ria. Hi, Ria. Late na umere yung kay Duterte kagabi. Lagi naman. Good morning. I'm Charles